Hello and good morning. I'm Ethan Feller from Zacks Investment Research, and this is Momentum Mondays. Here I cover the major economic events of the week ahead, show you some of the leading momentum stocks in the market, and prepare you for a week of profitable trading. Today, I'll be taking a look at the broad stock market indexes to summarize the action over the last few weeks. Then we'll take a look at the economic calendar to address any market-moving data coming our way. And finally, I'll share with you 4 compelling technical trade setups in stocks with top Zacks ranks. So first things first, let's take a look at the broad market indexes. We can see that the S&P 500 last week at its low sold off about 8% from its high in late July, and that the majority of the selling really happened over the last 2 weeks or so. Selling accelerated considerably following Jerome Powell and the Federal Reserve's interest rate policy meeting. Basically at the meeting, Jerome Powell stated that the Fed is going to keep interest rates higher for longer. And he has that room because the economy remains strong, unemployment remains low, and but inflation is a little bit stickier than I guess the participants want. So I think really it's a very conservative take, and it's a defensive take, and it allows him to set expectations of market participants in a rather hawkish way. So it allows him to, if there's any bad news in the economy, like, we see an economic slowdown or unemployment picks up or inflation accelerates lower, it gives him room to say, okay, I'm going to let off the gas on these interest rate hikes and become a little bit more dovish. So he's really set the expectations very conservative for market participants. And understandably, investors sold because of it. You can see the S&P broke below this pretty important level here. However, it's reversing pretty nicely. But again, interest rates, this movement is a big deal. And we can see the 10-year government note, treasury notes are now at basically 17-year highs. And again, this is a major development that has, investors concerned. This is going to tighten the market. However, again, Jerome Powell is in this interesting position because, most would expect, okay, interest rates have gone from basically 0 to almost 5% over the last year and a half, 2 years. But the economy remains extremely robust. And that's because there's a ton of fiscal spending. On the fiscal side, we have lots of government policy that's really keeping a bid under the market. So infrastructure policy and Inflation Reduction Act. The government is spending in a major deficit. And so, in my opinion, it looks like interest rates are really doing the tightening that the fiscal side sort of doesn't want to do. So although we saw the S&P break down from a pretty important level, I think this NASDAQ chart is pretty encouraging for the bulls. We have this downward sloping trend line that the NASDAQ has held pretty nicely. NASDAQ is just nearly 10% off of its highs. But again, this level, it looks nice. And we had a nice reversal here last Wednesday. And I think so long as the NASDAQ holds above this 14,500 level, you see it come to the top of this range. And really, if you zoom out a little bit more, this is like a bull flag. And, I can see the market trading sideways and eventually breaking out of this bull flag. So I remain bullish on the market. I think a lot of the analysts at Zacks think that we're going to have a year-end rally, and I agree with them. So let's take a quick look at the sectors. Energy has been extremely strong over this last month. CXLE has been the strongest sector over the last month, and also over the last 3 months. It's considerably outperformed the rest of the sectors, and even over the last 5 days. You can see it's outperformed. However, with that really strong outperformance, when I look at energy stocks, I think it's a little bit extended, and I don't really see too many clean trading setups like the ones I'm going to show you. So maybe we'll let oil prices correct a little bit, the energy market correct a little bit, and then those charts can start to set up again. So we'll come back to that. Now, for the economic calendar ahead, it's a pretty busy week. On Monday, this morning, we're going to have PMI, ISM, and construction spending. Tuesday, we're going to have job openings. Wednesday, ADP employment, service PMI, factory orders, ISM. And then Thursday and Friday is really the big news. These are the more important data. Initial jobs claims is going to be really important. Trade deficit, relatively important. And then this unemployment report is going to be very significant. As I referred to the Fed before, it's this weird environment where bad news is almost going to be good news, because say jobless claims, we have lower jobless claims than expected, right? We're expecting 209,000 for this coming print, 204,000 last month. Let's say we get under 200,000, it's going to be bad for the market. Even though we're showing strength in the economy, it means, okay, well, that means Jerome Powell can tighten more. Alternatively, if we see unemployment come a little higher, say, this number is over 209,000, or this number comes in above 170,000, but the unemployment rate is above 3.7%, that means, okay, well, Jerome Powell's going to ease off the gas, and, that's going to actually be bullish for stocks. So these are important numbers to keep your eyes on this week, Thursday and Friday. So let's get into my stock recommendations this week. First things first, we got NVIDIA. This is the stock of the year, and I think it's going to finish the year being the leading stock in the market. It's the best performing stock in the S&P 500. It's up over 150% year to date, and I think it continues to show promising action. You can see it's a Zacks rank 1 stock. It's in the top 14% of industries. It's industry ranked semiconductors, leading the market all year. It's got earnings per share growth over the next 3 to 5 years of 13.5%, and forward PE of about 41 times, which is really worth noting because lots of people say, oh, NVIDIA's got a 200 PE, but so I'm going to show you, because of these huge earnings revisions that it's gotten, its forward earnings are really not too unreasonable. We can see that analysts have unanimously raised earnings estimates for NVIDIA. Current quarter earnings estimates have been raised 50% in the last 60 days, and fiscal year 23 earnings have been raised 37%. So let's take a look at NVIDIA chart. So NVIDIA has this falling wedge sort of breakout pattern. It's broken above this significant level of 427 and has already begun moving higher. Something that I thought was really bullish that I want to note that happened on Friday was the EU launched a case against NVIDIA, and it's an anti-competitive case against NVIDIA. I don't know how they're going to do, but NVIDIA does own this market right now, does own the AI market, and you would think that's bad news for NVIDIA. However, on this news, NVIDIA gapped higher and held higher all day. So, if a stock reacts positively to bad news, it's very bullish. So as long as NVIDIA basically holds above this 405 level and really above this breakout level, I think it's likely going to make a year-end move to another new high above 500. So NVIDIA is stock pick 1. The next one is Vistra. Vistra is an electric and natural gas utility company. It pays a nice 2.5% dividend. It's got a very reasonable forward earnings multiple, under 10. It's a Zacks rank 1 stock. Utility electric power is in the top 27% of industry rank, Zacks industry rank, and it has upward trending earnings revisions. Excluding this one here, all earnings estimates have been revised higher over the last 2 months. 32.5% in current quarter, 14% fiscal year 23. Let's take a look at Vistra's chart. Yeah, Vistra is a stock that I've noted a few times on this Monday momentum in the articles, and it just is consolidating, breaking out, and I think we got another nice bull flag pattern here, and once Vistra can break out above 33, 75, 33.80, 34. I think it's worth taking a look at. It's got a lot going for it. Reasonable earnings multiple, upward trending earnings revisions, and nice dividend. And utilities give you, kind of a defensive addition to your portfolio too. So, if tech decides to roll over, you can, utilities will probably outperform. Say utilities don't do so well, tech will probably outperform. So it adds a little bit of diversification to a portfolio. Third stock is Copart. Copart is a company not everyone may be familiar with, but it's the U.S.'s leading automotive auction and remarketing company, and it has a commanding 40% market share in its industry. It's a Zacks rank 1 stock. It's got upward trending earnings revisions, and it's currently the number 1 stock in the Zacks industry rank, which is pretty cool. It's got slightly premium earning multiple at 31 forward earnings, 31 times forward earnings, which is above its 10-year median of 22. But it shows some nice momentum, as I'm going to show you, and it is the company in the industry. So Copart is building out this really nice bull flag here. It's got this clear level of support here at 42.70, and it's got this sort of tightening channel. And when you're looking at these momentum breakout stocks, the tighter the range can get, the more compressed the volatility can be, the better. Because in a breakout, low volatility leads to high volatility eventually. And again, you want to put alerts on either one of these. Let's say below 42.60, it's probably not going to look so good. But if the stock can break out above 44 or 44.50, I think it's going to make another run higher. And I just want to show quickly, Copart has just incredible long-term returns. And I always thought this, not a stock everyone knows, but, nearly 3,000%, 4,500% since 2004. Very impressive. And now the last stock I want to show is Dell Technologies. Dell, they make PCs for consumer, for enterprise. They also have a data center business, and they've entered the AI part of the data center business. So they've got a few things going for them. Style scores look good. A for value, growth, VGM, although momentum is a B. Still looking good. It's top 32% industry rank. Got good forward earnings per share growth estimates, and it's got a reasonable valuation, just 11 times forward earnings. And it's got a dividend to boot, 2.15%. Like the others, it's a Zacks rank 1. It's got upward trending earnings revisions, 8.1% for current quarter earnings estimates, revised higher. Fiscal year 23 have been revised higher by 13.5%. So it's definitely got bullish catalysts. I really like this Dell setup. It's just a really tight flag here. After gapping higher, it's clearly held these levels, and it looks like it's breaking out just this morning. So if Dell can break out above 69.50 and hold this level after the close, I think that signals a breakout. And if it does break out, you don't want to see it back into the range. And if it breaks down below, or this 67.50 level, let's say, I think this chart pattern may be broken. So, but it's looking good today. And with all these chart setups, it's key that the market holds up, and they're all going to be correlated to what the market does. But again, I think the market is looking good after this pullback, and I think this is an opportune time to pick up some of the leading stocks in the market. Thank you all for checking out the video. Hope you found it informative. If you like this content, please like and subscribe to the channel. And if you want more from Zacks, go ahead and sign up for our current promo. Link is in the description. Thanks.